Vikas Khemani of Edelweiss. He's of course the President and Head of Institutional Equities, and I'm told he is ready. Yes, he joins us right now on the show. Vikas, thanks so much for accommodating this interview request as we celebrate our 3rd anniversary at ET Now. Thanks for taking the time out. What's the call, Vikas? The market shrugging off in today's session. The disappointment, if at all, of no RBI rate cut coming in yesterday. How do you think we are poised for the next, say, 3 to 6 months?
See, I think if you see, markets have been, in last 3 to 6 months, sort of seeing a lot of negative news flow from all front, domestic as well as the negative, as well as the international front. And I think so most of the negatives on the macro front seems to be sort of factored in the price. Now the only sort of hope or only thing which market is right now looking for is a change in the situation. And I guess the moment that change starts happening, market will start sort of resuming some amount of positivity or rally. But till then, I think market will remain in a very narrow range. Definitely, it appears that in absence of any, unless there is a big sort of global crisis kind of situation, which is unlikely to happen, market seems to be sort of limited. Downside seems to be very limited on that front. But the moment I think we start seeing some amount of positive news flow on the domestic front as the policy action starts happening, as and when that happens, I am quite hopeful that market will sort of cheer that up. I mean, probably one positive could be post-presidential election might see some action on the policy front from the government. You might see next RBI policy beginning to sort of see some rate cut. Obviously, monsoon is a big factor which right now is uncertain. So I think, but by and large, I feel that the downside seems to be sort of limited, and there's an upside risk as and when the environment changes or some news flow takes place on the macro front.
Right. What's the sense, Vikas, in terms of sector approaches then in this sort of a market environment? Because one opinion is that you still stay with the defensives, even though they come at a slightly expensive value or at a slight premium. The other opinion is perhaps there's reason to take contrarian bets in cyclicals or sectors related to the investment cycle like cap goods, engineering, even sectors such as aviation are drawing some interest.
So this is the biggest question which is biting most of the portfolio managers what to do, because I think there is a situation which is becoming that most of the negatives are factored in. Downside seems to be limited, but I think things are not changing. And if this continues for, let us say, another 3-6 months, there might be some downside, but upside might not come in. And what do you do? How should you play? My sense is that I think as the interest rate starts sort of getting cut, you will see interest rate sensitives doing well. There is a case which is right now, I think, becoming more or less clear to add some beta in the portfolio from these levels. While I'm not saying that macro things have started changing big time, but I think keeping in mind the valuation, keeping in mind most of the negatives are sort of factored in, and as and when market starts seeing some positive flow, high beta stocks will do very well. So I think I think the case is being made to also go long on banking sector at this point in time. Similarly, I think some of the high beta stocks in infrastructure also I think would do well if interest rates start getting down. So I think some amount of beta can be introduced at this point in time in the portfolio. Now the biggest I think worry or dilemma at this point in time that this situation can continue for 3 months, continue for 6 months, and this intermediate pain is going to be the most crucial period. How do you sort of carry out this period? And frankly speaking, there's no answer to that. I mean, one has to sort of align the portfolio, keeping in mind the risk reward of the portfolio you carry.
What's your outlook on the rupee and how that is translating into gains on sectors such as IT as well as pharmaceuticals, the export-related themes essentially?
So I think rupee has been at a record low level. There's no doubt about. I think the current account deficit has been widening, and we see while there are some measures which has been taken, but I think rupee is at a record low, and I think most of the emerging market currencies have depreciated. So unless we see significant change in attitude towards emerging market in general and India in specific toward from a foreign investors perspective, we will not see a significant improvement in the rupee. But I do not think frankly that rupee will have further downside from these levels. So I think as and when the situation starts improving, whether it will happen in 3 months time, 6 months time, I do not know, but I think rupee will start appreciating from here on. And I think that is how one has to see. Now, as far as the IT companies are concerned, I think they are obviously the beneficiary of this depreciation, like most of the export-oriented companies. And I think till that, so currently they are enjoying the sort of party of that. But I guess as and when it start appreciating, that will sort of hurt them. But I think anyway, I mean, most of the IT companies have very efficient operations to manage forex volatility. I mean, they have seen probably volatility from 40 to 55 rupees kind of, 45 to 55 rupees kind of volatility. So I think they are fairly efficient to manage their currency volatility. So I would tend to think that currently they are, I mean, they should be evaluated not only based on the currency, but they should be evaluated based on the value proposition they offer to their customers internationally.
Vikas, what are you hearing on the oil marketing companies? I mean, there are a couple of rumors at least which are doing the rounds, and more so in the pipeline as well. And the crude fall is aiding the kind of move that we're seeing in the stocks today. Are you advising, or are you asking your team to advise your clients to add on to positions or start buying into oil marketing companies, or the time is past now?
I think it is too sort of news flow driven, too speculative, too sort of dependent on what government decides. Currently, it appears that probably the government has taken some tough action which has sort of benefited oil marketing companies. But I think to make a structural investment, in these companies, you need to see complete reform in the oil price, pricing, and which has not happened. So I mean, at best you can take them as a trading calls. At best you can take them a short-term, price movement opportunity. But I don't think you can make them as a portfolio investment from a structural long-term perspective unless you see proper reform on that front. And at best it becomes then a trading call based on the price movement of the underlying oil. So I mean, from our perspective, we have been sort of not aggressively recommending these stocks from a long-term perspective.
Okay, Vikas, for somebody who is your client and is not a mutual fund, so is not subject to his stock purchases showing a performance at the end of every month, what would be your top recommendations from a 12-month perspective? Would you recommend buying into the pain, into infra or capital goods, so on and so forth, or still consumption remains the best bet?
I think it again depends on the risk reward of the risk reward profile of the individual investors. But ideally, I would like to sort of recommend a stock which has a reasonably good growth profile continuing and reasonable valuation even in a tough market situation. And I would tend to think, if I were to look at and obviously good corporate governance and good business model. And if I were to, generally we do not recommend, but since you are pushing me, I would say that I think Zee Telefilms is one stock which I would recommend at this point in time. A reasonably good valuation, good ROEs, 19-20% ROEs, biggest beneficiary of subscription revenue, the digitalization of the media, and I think company has been doing buyback. So I think which is a fairly good communication to the investor in terms of belief of the promoters. So I think it's very sort of profitable media company, not very expensive, 18-19 times trading, growth going to be continued. So in my opinion, it could be multi-bagger in the next 2 to 3 years kind of time.
Well, Vikas, maybe call it a third anniversary gift to our viewers. So thanks so much for that. If I were indeed be pushing you, I would probably ask you for a recommendation. No, I'm saying if I were to push you, I would ask for a recommendation on the brokerage stocks, but I'm not doing that. But just one final word, Vikas, just to sum up your view right now, from the current point of time up to the next, say, 6 to 9 months, Vikas Khemani is more bullish on the Indian markets, or he is circumspect on the Indian markets?
No, I'm saying it is a lot dependent on what action being taken. I see that there is a limited downside in the market, but the upside clearly depends on what is being done to promote the investment activity in the country, which is right now the biggest threat. If it is not being done, anything serious is not being done in the next 3 to 6 months, then I think we will go into a very poor trajectory, which will probably carry on till the general elections. So I think next 3 to 6 months will be very crucial to watch out from the government's perspective. What are they doing to boost investment in the country? And that is going to be very critical. And as you know that we've been expecting government action for long now. Now, every time you build expectation, but you sort of get disappointed. So I hope this time we don't get disappointed, and I think positive trajectory continues, or the market takes a positive trajectory. That is my hope, but I cannot say for sure that government will take action, hence markets will start sort of doing well.
Okay, Vikas, once again, thanks so much for accommodating this interview request on the 3rd anniversary of ET Now.
Pleasure is mine.
Appreciate you taking the time.
And congratulations to all of you.
Thank you so much, Vikas.